Good afternoon, everybody. Going to go over our Forex trades for today, Friday, October 16th. Just had one trade, which we had 40% of our normal size that you see here on the screen. Really solid trade. It was a swing trade, which we were in for, about a day and a half or so. We do have a few other positions on, scalp swings that we're currently down to relatively flat on, which looks like we may be carrying into the weekend as where it's pretty much lunchtime here on a Friday. Market's going to close in about 5 hours or so. But if we hold them, we hold them. Anyway, before we go over this trade, let's just talk about some economic data that came out this morning. Really not a whole lot. Michigan consumer confidence came out it was a little bit better than expected, which is actually a positive sign there. But we get several consumer confidence numbers throughout the month, and that's just one of them. You may get another one that's going to look bad, so you have to kind of take it with a grain of salt there. Industrial production came out with a contraction of 0.2%, which was in line with forecasts. Unfortunately, the forecast is for a contraction of 0.2%. Want to just touch base on the Fed funds futures, which is the probability of an interest rate either cut or increase. Obviously, we're talking about increases now. The odds for the month of December have dropped to 30%. So for the odds for this month, October, pretty much nil. And December was about 38%. As of this morning, it's all the way down to 30%. So not looking too good. And we also came across a story saying that the U.S. banks, they're feasting on treasuries. They're just buying treasuries like crazy. The 2-year treasury is right around 2% level, and they're buying even shorter term treasuries, 90-day treasuries, a year treasury. The banks can't get enough of it, and they're buying it like crazy. It's just another sign that the banks, the big institutions, just don't think the Fed is going to be raising rates this year. And there's only a few months left, but they don't think they're going to be doing it at all. As a matter of fact, Fed fund futures, the next month going forward that has a 50% odds of the Fed raising interest rates is April. So that's not great odds, right? You want to see higher odds. You want to see 70, 80% odds. So you have so much uncertainty of what the Fed's going to do. The market, from the bond market to the currency market to the futures market, is telling the Fed, don't raise rates now. Don't raise rates anytime in the next few months. We have Fed governors coming out this week and last week. Some of them indicating no, right, that we're not going to raise rates this year, but some of them are indicating rates. So someone was indicating possible this month, and if not, definitely by the December meeting. I think 2 or 3 of them. So, and some of them are saying that one of the guys, I don't know if it was Bullard or I don't remember who it was saying that the market's expectation of what interest rates should be and the Fed's expectation of what interest rates should be are completely different. And he says the market needs to adjust and reflect what the Fed's thinking. And I find it comical because here you have the Fed, the governors and the chairwoman, I don't know, whatever, there is a dozen of them or so. Yeah, that's their job. They're supposed to guide the economy and set interest rates. But you basically have these 12 people or so that are trying to say, some of them are trying to say, we know better than the market. And the market is made up of thousands and thousands and hundreds of thousands and probably millions of people, investors, and thousands and thousands and who knows how many tens of thousands of fund managers, from mutual funds to hedge funds. Most of them telling, because it's most of them, because you have the 10-year treasury down at 2%. You have stock markets rising whenever there's terrible economic news out there. All these fund managers and all these investors to the tune of millions of them is telling the Fed no way is the economy of the United States, no way is the global economy strong enough to warrant an interest rate rise. But here you have these 12 or whatever it is, and a percentage of them saying, no, Mr. Market, all you millions of people are wrong, and us few are right. It's insane. I gotta tell you, it's absolutely insane. All right, that's enough of my ranting. Let's get to that one trade. We had swing trade, US dollar, Canadian dollar, which we got a short for 1.29471. Why did we have 40% of our normal size? When you would take scalps, and some of our scalps are, 20 or 30% of our normal size, usually you're going to take smaller swings than scalps. It's very simple. Not only the algorithm, but the chart itself, is telling us to risk in the neighborhood of about 40 pips. Okay, so if you're going to risk 40 pips, I don't care if it's a swing or a scalp, you got to set your size to what you're risking. Okay, so on a scalp, if we're gonna risk 40 pips on a scalp, we would take 40%, maybe even more, 50% of our normal size. If we're gonna risk 100 pips on a scalp, we're gonna take 15 to 20% of our normal size. If we're risking 100%, if we're risking 100 pips on a swing, we're gonna take 15 to 20%. If we're gonna risk 200 pips we're never going to risk 200 pips on a scalp, but if we're going to risk 200 pips on a swing, we're going to take 10%, maybe 8% of our normal size, 5% of our normal size. So it's all on what you're willing to risk. The chart and the algorithm was telling risk in the neighborhood of 40 pips on a swing. So we took 40% of our normal size. So if we got stopped out, it would have been a total of size adjusted of around 16 pips, completely acceptable. It never went that way. It came in our favor right off the bat. Yes, we were in it for quite some time, a day and a half or so, maybe a day. It came in. We failed to cover here because we were expecting it to go down more, right? Because it is a swing. So, we're not looking to make 10, 15, 20 pips, 30 pips like we make on a scalp. We're looking for, again, we're going to let the chart tell us, but the idea of a swing, you're going to look to make, 60, 80, 100, 150, 200 pips. So this came in our favor, about 70 pips or so. We failed to cover. We got this kind of a strong bounce. We were going to cover if it, if we started to go into the negative here. But it completely stopped, reversed. And when it came back down to this area where the buyers stepped in, we figured, well, we better cover. Of course, when we covered picking up 72.5 pips or size adjusted 29 pips, of course, the time we decided to cover, it went through it and came all the way down to 1.28, let's call it 30. We covered 1.2875, 74.6. So, you're talking 40 pips or so, 45 pips, which would have been nice. I guess we could have pieced out, but again, it's a swing. Scalps, we're more inclined to piece out on scalps just because scalps usually moving a little bit quicker. But it was a nice trade overall. So that's it. We're going to wrap it up. Just that one trade, 29 pips on a size adjusted basis. Really solid. We do have a couple of positions on now, swings, scalps and swing. We're trying to get into a position of a swing as well. As of right now, we're down to flat on the 2 or 3 we have on. We will possibly be holding them into the weekend, which we'll be okay with. The size is okay and whatnot. So, but you never know. We still have 5.5 hours left. So that's it. We're gonna wrap it up. If you're still trading now, good luck. Not gonna be any. I don't think there'll be any more signals coming out the rest of the day. You never know though. And we'll be back Monday, assuming we get out of these positions that we have on now, or we do get some positions Sunday night or Monday morning. So that's it. So have a great weekend and enjoy the rest of your day.